The price of gold until 1971 was at $35 an ounce. And now it is around close to 2,700. So in my book, actually, gold has kept its purchasing power. The price of bread is not up as much as the price of a gold of ounce, as an example. But the price of insurance premiums is up maybe more. So I think that people should own some precious metals.
There is absolutely no justification for running a $2 trillion deficit in a year when the economy was strong and inflation remained a challenge. This sharp policy reversal is striking, considering that in 2023, Congress enacted legislation projected to reduce the national debt by $1.3 trillion over a decade. By contrast, 2024 saw an increase of $1 trillion in projected debt over the same period. Such fiscal decisions underscore a lack of consistency and raise concerns about the long-term economic implications of unchecked spending. The incoming administration, set to take office next week, faces a daunting fiscal landscape with critical decisions on spending, revenue policies, and legislative priorities. Budget reconciliation, government funding, debt ceiling negotiations, and expiring 2017 tax law extensions are expected to dominate early discussions. These challenges arise as America's federal debt has surged past $36 trillion, a staggering figure that now exceeds the nation's entire economic output. This unprecedented debt reflects decades of fiscal policies marked by relentless spending on entitlement programs, military budgets, and emergency measures during economic crises. The growing debt raises concerns about the government's ability to manage its obligations and puts pressure on future economic growth. Amid this financial uncertainty, gold prices have reached record-breaking levels as investors flock to safe haven assets. With gold spot prices surpassing $2,468 per ounce in 2024, the market has demonstrated a strong bullish trend driven by economic instability and diminishing confidence in traditional dollar-backed instruments. Central banks have significantly ramped up their purchases of gold bullion bars, signaling robust institutional demand that retail investors are likely to follow. Renowned analyst Marc Faber's analyses predict continued upward momentum, with projections suggesting gold could reach $3,000 per ounce by the end of 2025. Or potentially sooner if current trends persist. We present the clips of Faber's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Well, you see, when I grew up, I remembered very well what the price level was in Switzerland. And when I go back to Switzerland now, I live in the north of Thailand, I can compare the prices that exist now with the prices that existed in the 50s and 60s. And then I look at the price of gold. The price of gold until 1971 was at $35 an ounce. And now it is around close to 2,700. So in my book, actually, gold has kept its purchasing power. The price of bread is not up as much as the price of a gold of ounce, as an example. But the price of insurance premiums is up maybe more. So I think that people should own some precious metals. I like now platinum. I think platinum is relatively depressed. And in a bull market for precious metals, it can go up. But what I wanted to say about gold, I don't think that gold is that cheap. But then I look at the whole financial system. You see, when I started to work on Wall Street, the market capitalization of the US was just 25% of GDP. Now it is close to 200, about 170%.
Wow.
And the whole bond market in America was less than $1 trillion. It was around $900 billion. And now you know how big it is.
I don't even want to guess, like trillions.
Yes, you can't imagine.
What is the number?
So, then I'm saying to myself, can we determine whether gold is expensive or cheap? According to some statistic, I could say that gold is not expensive. According to others, I can say it's expensive. But I can do the same for, say, I look at the price of soybeans, wheat, corn, sugar, and so forth. Is it expensive or cheap? It's more expensive than before, but it's still depressed, relatively speaking, compared to other prices that went up much more. The problem I want to explain to you and your viewers, the problem of monetary inflation is that it distorts everything. Everything becomes very murky. It's very difficult to say, is my house expensive or cheap because of monetary inflation? And then there is also the fiscal aspect. Suddenly the government in its ultimate wisdom, and we see its wisdom, how they handled the fires in Los Angeles. This is now a good example of government's competence. It's a complete disaster what they've done. Anyway, what I want to say is, in monetary inflationary times, when the government issues more and more money, it becomes very difficult to determine I'm wealthier or poorer, because everybody soon will be a billionaire. It will be a billion like in Zimbabwe. You can do the following calculation. You could essentially measure GDP growth this year. As I said, it's already a figure that needs some adjustments about the rate of inflation. But let's take GDP growth of, say, 3%, and then we measure by how much has the government debt increased. If the government debt increases more than the 3%, then I could argue it's all been essentially financed by the government, this growth. And is this sustainable? Now, the modern theory, monetary theory economists, they will say, debts don't matter. The other day there was a clown on TV, a financial advisor, of course, and he said debts don't matter. Well, in the US, they began to matter now because the interest expenditures every year are over $1 trillion. And they're not going to come down for the foreseeable future because interest rates aren't going to come down meaningfully for the foreseeable future. So you end up in a situation where the government or the Fed will have to print money so that they can pay the interest on the debt. And then you are in a death spiral. A death spiral. Hyperinflation. And that is what every government, every society has done in history. To tell people, you have to tighten your belts. We have to cut your pensions. Is politically in the democracy not acceptable. I wrote a report, why in democracies we'll always have more inflation. The other option is you go to people and say, look, we've been spending too much and we've been living over our standards of living. So what we have to do is to increase taxation. They do it to some extent already on homes. To maintain a house is becoming more expensive in the US because the insurance premiums are going up. And in some areas, like in Los Angeles now, the insurance company stopped insuring against fire because they were afraid that the government is so incompetent. A lot of people lost their homes without an insurance. I don't insure my homes either, but this is a risk I can take in my life. And you can see I have a lot of books, a huge collection and so forth. I can't insure this anyway.
Yeah.
And, in life we have to get used to the fact that one day we go somewhere else and we have nothing at all.
U.S. inflation likely worsened last month, fueled by rising costs of essentials like gas, eggs, and used cars, complicating the Federal Reserve's efforts to ease monetary policy. The Bureau's Consumer Price Index, a vital measure of inflation, surged 2.9% in December compared to the previous year, up from 2.7% in November, and a recent low of 2.4% in September. The uptick in inflation is raising concerns that it remains stuck above the Fed's 2% target, which has caused Treasury securities' interest rates to rise, pushing up borrowing costs for mortgages, car loans, and credit cards, despite the Fed's attempts to lower its key rate. Marc Faber critiques how mainstream economic discourse overlooks the real struggles of ordinary people. While financial media outlets like CNBC and Fox News focus on macroeconomic indicators, they often fail to address how rising living costs affect everyday consumers. Faber predicts that inflationary trends will continue, with consumer price inflation accelerating in the coming years. As asset inflation slows, a correction in stock market valuations is expected. Still, the more pressing issue will be the rising costs of goods and services, which will continue to strain households, particularly those with fewer financial resources. Let's get back to the interview.
We are in recession. I
Okay, we
mentioned
are
to
in
you
one.
that
Okay.
monetary inflation distorts many things.
Mm-hmm.
The fact that close to 70% of households live paycheck to paycheck tells me that the economy is weak in real terms. You understand? Your
Yes.
salary goes up, say, 4%, but your cost of living goes up 8%. So are you richer or poorer?
Definitely poor.
Yes. And I'm not exaggerating. Ordinary people are struggling, but ordinary people are never interviewed on CNBC and on your program and on Fox News and so forth. They have no voice. So the elite can tell the public, oh, the economy is doing well. This is the problem of monetary inflation. It creates huge wealth inequalities and concentration of wealth. I mean, I don't know whether I told you already on the last time I was on your esteemed show, but there is a book, and it was written by a professor. I mean, he became later a professor, but he was working in the Reichsfinanzministerium in Germany between 1918 and 23. And he wrote The Economics of Inflation. The author is Constantino Bresciano Turoni. I think you can see it.
Yes. The economics of inflation. Yes.
And he describes the impact of monetary inflation on everything, on stock prices, on the foreign exchange, on the gold price, and on society, and on the concentration of industries. During high monetary inflation, concentration of industry takes place. And there are fewer companies, but more powerful companies. And what then happens is complex, but if people are really interested in the subject, and I can't talk here on a program in 3 minutes about the complexity, but this is essentially what happens and it's explained in Capitalism, Socialism and Democracy by Schumpeter. This is a difficult book to read, but it's very, very detailed. And in it, there is one speech. He gave it in 1949, a few months before he died, to the Economic Club in New York. And he described, and that is easy to read, he described how capitalism will inevitably lead to socialism. Inevitably. Because the rich people actually like socialism, because the socialists can be bribed. You can pay off the socialists. And there are two aspects to inflation that I need to clarify. Most people say that when stocks go up, we are in a bull market for stocks. When the prices of homes go up, they say we are in a bull market for homes. But when the price of potato, tomatoes, and the chicken, and now notably eggs at the present time, egg prices are close to an all-time high, or in some regions they are at all-time highs, they say this is inflation. Every price increase is a symptom of inflation, and the cause of that price increase are fiscal deficits and money printing. In some cases, more fiscal deficits, and in some cases more money printing, or both. But whether the price of a house goes up or the price of eggs or beef or corn, it's a symptom of inflation, of excessive monetary expansion, period. The Fed never considered asset inflation. We're talking here about two things. In one case, the money that the Fed and the Treasury print flows into assets, and the prices of assets go up. We call this asset inflation. And then in other cases, it flows into goods like agricultural commodities, food, and into services like insurance premiums. The Federal Reserve, by the way, based on the Bureau of Labor Statistics, has healthcare prices going down for 3 years in a row. I don't know anyone in the whole world that pays less for healthcare than 3 years ago.
Yeah.
It's a complete fraud what the Bureau of Labor Statistics publishes. Fraud. I've seen insurance premiums. They went up by 100% in 3 years. The readers of my report, they send me these things. They showed me the insurance premiums went up 100% in 3 years. The Federal Reserve bases its assumption about inflation on the Bureau of Labor Statistics that has healthcare going down. What a joke. It's actually an insult to the sanity of ordinary people. And now the thing is this. We have 1981, and in the case of stocks, August 82, a bull market in asset prices. You know, everything is more expensive. Home prices went up irregularly, but today, home prices are much higher than they were in 2007 in the last housing bubble.
Mm-hmm.
And my view, since you asked me what I think about markets, I think this asset inflation is coming now to an end. I wrote a report, the Trump top. In other words, valuations are high and optimism is running rampant. People, never before have people or so many people expected stocks to be higher in a year's time than now. People are bullish. They mortgage everything to buy stocks. And and options. They take the most speculative aspect of the market. Anyway, I think the asset inflation is coming to an end, and the consumer price inflation is going to accelerate. In other words, the cost of living will keep on going up. I mean, I see it. I'm a shareholder of a hotel. What do? The occupancy is down, they increase prices. It's crazy.
Market volatility is pushing investors toward the safety of gold, although the precious metal faces pressure from a strong dollar and high interest rates, which typically dampens its appeal. U.S. gold futures recently rose to $2,679.60, reflecting cautious investor sentiment amid ongoing economic uncertainties. An analyst from UBS highlighted the delicate balance between gold's role as a safe haven asset and the dollar's impact, noting that concerns over potential emergency declarations from former President Trump and the prospect of universal tariffs could exacerbate trade wars and inflation. Additionally, the World Gold Council reports a net inflow into gold exchange-traded funds ETFs for the first time in 4 years, signaling a resurgence in interest in physical gold investments. This shift towards gold, driven by economic and geopolitical concerns, underscores the precious metal's enduring role as a store of value in uncertain times. If you found this message compelling and enjoyed the video, be sure to give it a thumbs up, share it with others, subscribe to our channel, and turn on post notifications for more thought-provoking content. Thanks for watching.